To fund compensation payouts and fines arising from the Deepwater Horizon disaster, BP has sold off $38 billion worth of assets. Its revenues and its share price have slumped, and by market value, the group is only two-thirds the size it was before 2010. One of the few pieces of good news directors can give shareholders is that they're settling the fallout from the disaster quicker than scheduled. The last outstanding issue is a big civil case for compensation currently being heard in court in New Orleans. BP says it could cost it $8.5 billion or more.
They're currently in the middle of litigation in the US, in which is hopefully the last case to finally put the matter to bed. What isn't known, however, is what the final bill is likely to be. It's already ramped up to somewhere like $40 billion. But once we can have that final part of the jigsaw, at least the company and indeed investors can then move on.
BP used to be a core stock in the portfolios of British investors. Since 2010, it's been downgraded to a so-called recovery stock, reflecting the risk that BP may never fully recover from the Deepwater Horizon disaster. Now, many investors are calling on its directors here at its headquarters in London to come up with a comprehensive new strategy for BP, radically different to the old business model.
They are going to have to play to those strengths, which are in higher risk, technologically difficult areas. The real problem is, from BP's point of view, they've made great play of those strengths, but they haven't turned around and said, for example, we are targeting a 5-year plan to increase production by X% a year, or to increase reserves by X% a year. So there's very little substance behind the rhetoric.
BP is at least paying out dividends to shareholders again, and last month it launched an $8 billion share buyback program. This should raise the share price and keep investors happy, at least in the short term. Jeremy Howell, BBC News.